Our view in the near term, I mean, even if you look at the options, the demand for some of the call options, it's actually been quite strong. I think for dollar Sing, I think has been quite strong. People are actually trying to play into the dollar. So I think in the near term, I think dollar strength would be there. However, I think as you pointed out, if the US election results swing to a sort of non-Trump sort of scenario, I think some of this dollar sort of build up, which we think it's to some extent a bit overdone, depending on how the data extensions have actually built up in terms of dollar strength, could actually unwind a bit. And I think the unwinding could be around that three index points or maybe 4 index points back to about the 100 level, back where it was in September.
Sherry? Satyandi, this is Sherry in Hong Kong joining the conversation. Thank you very much, Tanvir. So we've got lots of U.S. data set. I mean, we used to care about it so much, but of course, in this pre-election cycle, will they get buried? Because we've got PCE and jobs data, but I think the market understands they are digesting 2 hurricanes, a Boeing strike. Is that how you think?
Yeah, so I think the data for the US could be weighed a bit, probably for data that's coming in next month, because I think some of the ramifications of some of the weather-related impact would be coming in more sort of significantly towards the next month's data. But indeed, I think the data may play a second fiddle to what the US election data would be. My sense is there's 2 factors going on here. There's that political angle in terms of the tariff concerns, global tariff concerns, and then you have the US data, which leads to how policy would move going forward. Our view is there's still a possibility of maybe 25 to 50 basis points sort of move by the Fed, and some concerns about whether there's going to be a pause. So that is the other angle that we need to start worrying after the US election sort of tail risk sort of peters off.